let's talk about financials then. Who is still buying financial companies? Our next guest, George Antonopoulos, president of the WallStreetEye.com, joining us now with picks that are financial. So, George, you're being the contrarian. You're going after these guys. What do you like?
Well, I love Goldman Sachs. Thank you, Warren Buffett. He injected $5 billion into Goldman Sachs yesterday, throughout this week. And like Eric, our firm has been buying Goldman at 100, 105, 110 for our clients. We're very, very bullish on Goldman Sachs. Best of breed, a PE ratio of 9, pays a 1% dividend yield. We believe, although now we've kind of scaled back a little bit because now they're going to be more of a traditional bank because of the charter change, but we think Goldman Sachs is going to be one of the biggest dominant players in the space over the next 3 to 5 years. This is a strong buy.
Do you still have your Goldman, Eric?
I still own my listen, my son's going to have to sell my Goldman.
There you go.
What else? Give us another financial. You know, a lot of people like Goldman because of Warren Buffett. What else you have?
Bank of America. Bank of America just acquired Merrill Lynch. It's an incredible buy on Bank of America's part because they got Merrill Lynch at a discount price, and as soon as those earnings come in, as the economy bounces back over the next 3, 5, 7 years, Bank of America is going to be one of the biggest beneficiaries. Again, best of breed, and Bank of America was pretty much unscathed through subprime, so it's trading around 35, a PE ratio of 18, and a 7% dividend yield. 7% dividend. That's amazing.
But George, you know, when the B of A Merrill deal was announced, everybody was saying $29 was ridiculous.
Well, the fact is it's not necessarily what has been paid or how everything will fall out. What I'm looking at and what we're looking at is the earnings moving forward. So the fact is that you want to buy Bank of America now, and we think that it could hit $50 to $55 a share, which was its 52-week high trading range over the last 52 weeks. So that's not, you know, that's not that far, you know, into the future for it to hit that kind of a price target.
George, first of all, it's Tracy Burns. The CEO wants to be like king of the world. He's like buying up everything under the sun. So you worry that it's going to turn into a Citigroup. Second, you still got Countrywide. It's not going to be accretive with that for another year. Then we got this Merrill deal. I mean, I think this is, if anything, a way long-term play.
Tracy, you're absolutely right. It's a long-term play. Bank of America has a lot to deal with, and they've made some big, big moves. But you've got to diversify your holdings, and you should buy a little bit of Goldman, a little bit of Bank of America, and buy an exchange-traded fund. You could buy, you know, a banking or brokerage exchange-traded fund to diversify your risk even more. But these are going to be the best-of-breed winners moving forward.
And we should say that you own all of these companies. You guys own all of them, including Morgan Stanley on your list. And I want to get Kathy's reaction really quick to these names.
Well, I think that there's more to fall out in the financials. Short term, when this bailout gets announced, everybody's going to have a party. You can see it happening already. And we do own double up financials, but we're looking at short-term trade. Longer term, I think that, again, unbelievable deleveraging. They're all going to get hit.
George Antonopoulos, thanks for the picks.
All right. Listen, XLF is that ETF, another one with both of those picks in it.